Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today with a market breakdown for you for the Forex currency cross US dollar Swiss, and which is one of the major currency crosses, and it's been very active lately. Before we get into that, we're going to just show the disclaimer real quick that just lets you know that this analysis video is for illustration purposes and educational purposes only. And with that, let's take a look at our first chart here. And what we have here is daily US dollar Swiss currency cross chart. Now, if you'll notice that we have at the lower part, we have a critical range that is set between 99.63 and 98.61. This will be the critical range that you'll probably see the market trading in over the next couple sessions, especially into today and tomorrow. The high that was set 2 sessions back and the low that was set on Friday is the range that we are looking for. The reason being is that a few sessions back where you see the low, that was the low that was stamped back 1, 2, 3 sessions back. Then it rallied up to that upper band, which is there at 99.63, and then it fell back to, on Friday, a low of 98.61. The reason these are pointed out is that the first one is the 99.63 is a lower move high. The second number is a higher move low. So with that being said, we're looking at a potential range trade or to a potential turn in the market. So with that being said, use those parameters as your breakout levels. If the market dips below 98.61, then the bearish pressure is definitely solid. US dollar weakness is prevailing, and we are going to see newer move lows. However, that being said, I think that what's really happening here is the Swiss was the leader in touching off the US dollar slide that's happened over the past week and a half. All the other markets that were major currency crosses and even your minor currency crosses had been holding firm, or had been weak rather, against the dollar, while the Swiss was the first one to give an indication of a turn. Now, that being said, this correction started a month ago and has really been pounding the support levels for the past 2 weeks. And with the current situation, with this higher move or lower move high and higher move low, in the short run, we're looking for a potential range trade to bullish correction to occur. So that bullish breakout range right now would be that first yellow pivot at just above parity, and then just above that we have a bullish another bullish breakout level with the dashed purple line. So that little breakout range would be where I think that if you get above 99.63, that will be the area you're going to flirt with, and the US dollar Swiss will probably have a little bit of trouble getting through that initially. Right now, the market is in a short-term bear market, so the rally would be a corrective move. At least that's how you should look at it. And since we have the higher move high with the the lower move high with the higher move low, if the market rallies and continues up, especially into that bullish breakout range, that would set a newer high, and it would also mean a short-term turn and trend, which would set the US dollar Swiss to be in a range trade to higher potential trading market. And like I said in the beginning, the US dollar weakness is probably what's driving this trade in this US dollar Swiss. There's not a lot of numbers that, even though there's the EU and Brexit things, and even though that trade zone impacts the Swiss greatly, the Swiss is a very strong flight to quality currency for the whole globe. And that being said, like I said, it was the precursor to dollar weakness. This may right now be the indication that the US dollar has made its little correction and is now ready to not necessarily make newer highs, but at least settle into a digestive trade. And if that would be the case, that the Swiss is the leader, then you would probably see the market trade towards that 99.63 level instead of towards the 98.61 level over the next few sessions, and then making that bullish breakout range a viable target if the market gets above 99.63. In the short run, I see the market falling off of that target breakout range and pulling back, just chopping around below parity while the dollar is in flux and the bulls and the bears grapple with direction. And we're going to probably see a lot of weak longs and shorts getting squeezed during those days. So it might be really good for options traders and volatility traders. You're also coming into the June rollover for the futures. So you have futures and options expirations. It's going to actually impact a lot of what goes on an intraday basis, even though the cash market is trading separately from those other derivatives. Those derivatives cause arbitrage opportunities. You have a rolling over of spreads and other various types of positions for the quarter, as well as for the different types of derivatives setups. So that being said, you have a very high chance of settling into a range trade. And I believe that low that was set a few sessions back probably will be the low for the next week and a half to 2 weeks if the bulls make a run, especially towards that 99.63 and make a challenge of that bullish breakout range up towards parity. If the bears somehow get a hold of this market and if they make a test of that 98.61 level and they break below it, then I think that all bets are off and the bearish momentum of the major trend is in place, and we will be skimming the lows and support into that session or a few sessions after that, and we'll have to take another look at it once the market does do that, if that is the case. But right now, I think that you more likely are going to see the challenge of the 99.63 level, and at which points, once it hits that bullish breakout range, then settle into a digestive trade, probably between parity and 99.5. If you go back on the weekly and monthly charts, you'll see a lot of trading digestion in that area. And once again, if this dollar weakness is what is driving this trade, if dollar weakness is really the long-term forecast or likelihood, then you're going to probably see the market having a lot of trouble with getting above the parity level. Above parity, we have a T1 and T2 target level. You'll notice the T2, especially once this starts going out into the August, that's where it's marked at. That's not indicative of time frame or the target timing. It's just the level. So that above parity, you have T1 at just above parity, and then you have T2, which is also above parity at par 0.0091. So that's almost a full dollar range where you could see an extended blow-off rally basically move into. I think that at that level, even if you look at the chart there, you can see that just above that upper pivot, that's when the market seems to either explode above or it has a little trouble holding around that area, and then it falls back. So with that descending blue line that's occurring right there, I think that the market is definitely still in a long-term bullish phase. If we do get the market trading back up towards those levels, it would be obviously in a short-term bull market. Right now it is not. It's just starting to show signs of maybe initiating one. And even if it does rally up into those areas, it will be most likely a corrective, at least in the short run, it will be a corrective move because the market is definitely in a bear trend. It would have to sustain that trading around parity and then make a run back up towards above 101, the parity 0.1/2 to parity 0.2 level. Then in which case, then this current slide that the market's in and where the market's at right now would have been a bearish correction, and then you would mean that the US dollar strength is full-blown back in action, in which case you'd probably see the US dollar Swiss reach into that 103, 104 handle area. These would be scenarios where the US dollar is gaining strength, and right now I think that especially if things go well for trade negotiations, tariff negotiations, and what have you, short run, that would be negative the dollar, which would make these markets turn around and facilitate a big slide in the dollar index, which even if it didn't happen for fundamental reasons because of news and because of the tariff wars or other things like that, it's probably necessary as far as on a trading aspect, because markets don't just trade in one way. And when they start trading on extremes, markets typically end up going in like they go out like they come in. So if you have an exaggerated slope in the US dollar trend as a bull, then when it does turn, when it pops, it's going to come back radically, in which case you'll see an explosion of especially most of the major currency crosses against the dollar, and even some of your lesser major currency crosses. So once again, right now we're a short-term bull. We got a short-term buy situation going on right now. It is not confirmed. It's just right now giving a fundamental trigger because of the lower move high followed by a higher move low. The market could be back on support later on. Tomorrow, it's a Sunday night right now. It could be Monday morning, taking out that 98.61 level and making new move lows for all we know. But I think that is a good risk area, is the low from Friday at 98.61, or you can even use the low from last Wednesday, which is the lowest low on the chart for the past month and a half. So if you're a bull, I would say that is your extreme risk scenario, which isn't that wide. So if you're an options trader, futures trader, or Nadex options, binary options type trader, you can capitalize off of that using that level as your base, looking for the bulls to not necessarily make a radical run for higher, but the market to close above that and stay above that 98.61 area. I think that if the market even stays within a range trade, that would be an area where you'll see lots of fresh buying coming in. I don't think you're going to see a lot of weak longs at that area. If we do take out that level and it goes low, you will see probably overzealous selling, not because of weak longs, but because you have so much strong buying that's coming in that changes its decision, or at least negates their positions and goes flat. That being said, I would think that probably, since it's Sunday night, that going into tomorrow and into the next couple sessions, you'll see the market gravitate towards that 99.5 level. And then, like I said, if it depends on the dollar, really, and the news. If we have anything that gives the dollar strength, then we're going to make a run once again at parity and towards that bullish breakout range. We had recent news with the Mexico-U.S. trade tariff dispute, that there's some good positive news that came out over the weekend and Friday, that Monday they should not be embarking on releasing this new 5% tax. And I know the U.S. is looking to hopefully have this as a model for China to follow, to start to come to the table and start acting like adults. We'll see. I doubt that the China-U.S. tariff thing is going to be resolved anytime soon. I think that the Mexican-U.S. tariff thing in the short run is positive. It's positive dollar, but that's one of your lesser major currency crosses, even though it's one of the major trading partners with the United States. So that being said, the dollar part of the dollar Swiss is influenced by these different factors, and we will see what pans out over Monday into Tuesday from the news with that. So that's probably why you have the market currently up in the U.S. dollar Swiss, because of that little strength in the dollar, but that's a short-lived type of thing. But we'll see. I think that it's probably going to be, at least over the next couple of days, a little lift in the U.S. dollar, putting some pressure on the Swiss as well as other crosses against the dollar. And then, like I said, this critical range here is most likely where you're going to see the trading for the next few sessions into the week. And only if you get a breach of 99.63 would we get to where we start looking at those upper targets, which then become very, very viable, because at that point you would see newer move highs where you've already set a higher move low. Fundamentally, fundamentally on a technical aspect, that being a bullish sign that the market is trying to make a turn, so it would be a range trade to higher levels. And that being said, definitely keep your money management levels tight. And to remind you, for the bulls, at least you know you have a very low risk buying area. You're skating on the lows. So if you want to get long, whether you're trading options or futures or the Forex outright cash currency contracts, then you know where your risk level is 98.61, the max of 98.5. Anything below 98.5, I would not be trying to. If you're already long, you should be out. And if you're looking to buy below, and if you're looking for a low ball dip, don't try and catch a falling knife. Wait for a buy signal. Because this market is under pressure. But right now we have the beginning inklings of a turn. We're not calling for a turn. We never want to try and do that. But we want to be prepared for it. And at least in the short run, I think that you have a better odds in your favor if you're playing the bullish side of this market than the bears. And if you are bearish and you are selling into this, then keep in mind that 99.63 level, because any trading above that, like I said earlier in this, will have you targeting that bullish breakout range, and you'll be selling into strength that you probably don't want to deal with. And right now, since we are coming into summer, we have the rollover expiration that we already mentioned. You could have skittish volume and other factors that could cause vacuum moves where it doesn't have have anything to do with fundamental factors, whether all of a sudden they come out with a Brexit. Tomorrow they could come out with a solution for Brexit. The China tariff deal could come to a solution, what have you. These things just aren't going to happen overnight. So take that in mind. And with that, we thank you for your time. We hope that you enjoyed this analysis. If you did, please like, follow, and share this link from Twitch to promote our videos. We're trying to come up with a schedule for our different traders and give you more content and make things more viable for you and active for you. And with that, we want to thank you very much. You have a good night. And also, one last thing, if you like this analysis, I wrote a book, High Probable Japanese Candlestick Patterns, available on Kindle and paperback on Amazon.com. Thank you very much. Like, follow, and share once again this link to help promote our channel.